Well, friends, good morning. So, the topic of the day is fiscal burden of crop insurance premium. Fiscal burden of crop insurance premium. The government is aiming to lower the fiscal burden for crop insurance premium by rupees 5,000 crore for both the centers and states with technological reforms, risk diversification, and wider coverage. So currently, 4 crore farmers are covered under the crop insurance in 23-24, which is the highest ever. The crop insurance premium is expected at 7 to 9% in the next tender cycle. The premium rate for crop insurance is 10.8 to 11%, currently at approximately rupees 30,000 crore annually. So the savings will begin in the next tender cycle in 26-27, which is likely at rupees 5,000 crore. So the tendering will begin in 2026 April-May. A YesTech yield estimation system through technology. It's called YesTech. For accurate determination of claim currently covers wheat and paddy. It has been extended to soybean from Kharif 2024 and is likely to cover cotton during the next months. So with these reforms bringing transparency into the calculation of claims, the premium rate for crop insurance is expected to reduce from 10.8% to 7 to 9% in the next bidding cycle in 2026. So YesTech assesses crop losses through technology for determination of claim amount. Now soybean has been included in it from Kharif 2024. The government is doing pilots to include cotton and pulses crop under the new technology. Cotton is likely to be included in it in the next 6 months. The Mahalanobis National Crop Forecast Center, that's known as MNCFC, under the Agriculture Ministry are drivers of YesTech technology. This YesTech is based on satellite imagery and uses drones to check the length of the crop, thus reducing manual work and scope for errors. So YesTech more coverage. Risk identification will help bring down the premium cost by rupees 5,000 crore. Or in the same rupees 33,000 crore premium, the crop insurance could cover 5 crore farmers in the next bidding cycle in 2026. In order to diversify risk, the government has opened the options under the bid model for states. So far 10 states have opted for the bid model and the government hopes for more states will opt for it to diversify their risk. The bid model has been adopted by states including Madhya Pradesh, Maharashtra, Rajasthan, Odisha, Karnataka and Andhra Pradesh. The model offers 18 is equal to 110 and 60 is equal to 130 options for risk sharing. Under the 80-110 option, the risk is shared between the state and insurance company, while in 60-130, the risk is shared between the insurance company and the state and center equally. So most of the states are currently implementing the 80 is equal to 110 option. Under the 60-130 option, if the claim is less than 60% of loss ratio, this surplus premium is returned to both the center and the state government equally. And if the claim is more than 130%, it is borne by the state and central government equally. So is the case under the 80-110 option. Apart from this, the standard Pradhan Mantri Fasal Bima Yojana is also available that offers no capping on loss ratio, under which the insurers need not pay anything back to the government, as they have to incur the entire claim liability themselves. So for the northeastern and Himalayan regions, the premiums cost of the crop insurance is shared in the ratio of 10 is equal to 90 between the state and the center. For the rest of the country, it is shared 50-50. Currently, 24 states and union territories have opted for crop insurance, while states like Bihar, Gujarat, Punjab, West Bengal and Telangana continues to opt out of it. That means general insurance companies reduced their exposure to crop insurance under the Pradhan Mantri Fasal Bima Yojana during financial year 24, despite the government's push to expand the insurance coverage in the farm sector. Gross direct premium underwritten by insurers declined by 4.17% to rupees 30,677 crore during the fiscal year, as against rupees 32,011 crore in the previous year, even as farmers faced crop losses due to floods, unseasonal rains and heat waves. So crop insurance premium underwritten had risen by 8.66% to rupees 29,465 crore in the previous fiscal, that is financial year 23. So the decline is mainly due to the 32% fall in premium income underwritten by the state-owned agriculture insurance company to rupees 9,890 crore during financial year 24 from rupees 14,690 crore a year ago. So AIC is the leading crop insurer in the country. Four government-controlled insurers, AIC, New India Assurance, Oriental Insurance and SBI General, reduced their exposure to crop insurance in financial year 2024. So what is interesting is that AIC paid claims to the tune of rupees 12,353 crore under Pradhan Mantri Fasal Bima Yojana during the year. State-owned Oriental Insurance Company also reduced its exposure to just rupees 8.94 crore in the financial year 24 from rupees 1,752 crore a year ago. So SBI General Insurance also reduced its exposure. New India Insurance Company, the largest insurer in the country, reported a negative premium underwritten at rupees 34.41 crore as against 11.38 crore last year. So four insurers controlled by the government directly or indirectly reported a decline in crop insurance coverage. The farm sector is a vital sector of the economy. Public sector entities should have been in the forefront of providing cover to the farmers who are facing the risk of losses due to floods, heat waves and unseasonal rains. So financial year 24 was a nightmare for farmers as they faced crop insurance losses due to a host of factors leading to a rise in inflation levels. Our general insurers overall reported a 19.55% rise in the premium income underwritten from rupees 17,391 crore a year ago to rupees 20,786 crore. As many as 8 general insurers kept away from crop insurance during the year. So the Pradhan Mantri Fasal Bima Yojana scheme, which is currently integrated with multiple stakeholders on a single platform, has covered nearly 4 crore farmers with more than 50 different crops in financial year 2024 under the insurance coverages. More than 55% of the insured farmers in the year are under non-loan farmer category, and are majority enrolled through CSCs, Common Service Centers, as a channel partner. So wherein the channel has registered an impressive 4 crore farmers applications with 2.5 crore and 1.5 crore enrollments in Kharif and Rabi seasons respectively. So Pradhan Mantri Fasal Bima Yojana provides a comprehensive insurance cover against failure of the crop, thus helping in stabilizing the income of the farmers and encouraging them for adoption of innovative practices. So the scheme is compulsory for loany farmer obtaining crop loan or Kisan credit card account for notified crops. However, it is voluntary for other non-loany farmers who have insurable interest in the insured crop. So the maximum premium payable by the farmers will be 2% of the Kharif food and oilseed crops, 1.5% for Rabi and oilseed crops, and 5% for annual commercial or horticultural crops. So to expand coverage of Pradhan Mantri Fasal Bima Yojana, the Ministry of Agriculture and Farmer Welfare launched AIDE, means App for Intermediary Enrollment, which allows intermediaries to enroll non-loany farmers from Kharif 2023 onwards. So this initiative successfully engaged insurance brokers and resulted in 71% of farmers' enrollment through point of sales persons, totaling 6.88 lakh farmer applications with more than 4.15 lakh hectares of area under insurance across 11 states and 12 insurers. Utilizing such extensive network of over 12 lakh POSPs, point of sale persons, via insurance brokers offers a substantial opportunity to increase non-loany farmer enrollments. So this strategy significantly enhances the enrollment of non-loany farmers while simultaneously expanding their access to a diverse range of retail insurance products. So as per the service level agreement, insurance intermediaries should provide enrollment services to non-loany farmers through the AD, that is mobile and web platform, developed by Ministry of Agriculture. So following the successful submission of the application on AD and the issuance of an acknowledgement to the non-loany farmers, the premium will be collected and remitted to the insurance companies in accordance with the timeline specified in the applicable operational guidelines of Pradhan Mantri Fasal Bima Yojana from time to time. Moreover, in financial year 2024, general insurance companies in India have reduced their exposure to crop insurance under the Pradhan Mantri Fasal Bima Yojana, even as the government pushed to increase coverage in the agriculture sector. So a major contributor to the decline was the 32% reduction in premium income underwritten by the state-owned agriculture insurance company. So the scheme is mandatory for loany farmers with the crop loans or Kisan credit card accounts for notified crops, and voluntary for other farmers with insurable interest. So the maximum premium payable by farmers is 2% for Kharif food and oilseed crops, 1.5% for Rabi food and oilseed crops, and 5% for annual commercial or horticultural crops. So utilizing such extensive network of over 12 lakh point of sale persons via insurance brokers offers a substantial opportunity to increase non-loany farmer enrollments. This strategy significantly enhances the enrollment of non-loany farmers while simultaneously expanding their access to a diverse range of retail insurance products. Because the initiative involving insurance brokers resulted in 71% of farmer enrollment through point of sales persons, totaling 6.88 lakh farmer applications covering over 4.15 lakh hectares across 11 states and 12 insurers. So this is a significant contribution of USPs. Thank you very much.